Hi, I am Jeffrey Warnick, and welcome to another pod shoot. I'm really very excited, thrilled, honored to have Robin Hansen as as a guest. Robin is probably the parent of prediction markets. I think it's where I got first exposed to prediction markets was reading Robin's work. And Robin also has had, like myself, I'd like to always remind, an affiliation with the University of Chicago. Um, and Robin is currently, among many other things, I assume, is teaching economics at George Mason University. Uh,
Correct.
so I really, I can tell you that I started doing prediction markets, or I didn't really call them prediction markets, but as somebody who was studied at the University of Chicago, I'm a big believer in price discovery, uh, and I'm a big believer in people revealing preferences, people being authentic, and I think the only way you can reasonably trust when somebody has all those attributes is when people have skin in the game. So I don't trust things that where people don't have skin in the game. I consider basically communication without skin in the game as noise. So being someone who was trying to figure out how to run my first business, being completely inept at doing it, I built a risk management company. So I knew something about risk management. I didn't necessarily know how to run a business, and I didn't really like running a business. Uh, and so I decided, since I had got to personally know Hayek, um, I wanted to basically see whether I could run a business as a completely decentralized institute with being basically being governed by markets rather than governed by hierarchy. So basically, there was no hierarchy, and I basically had all decisions made by people making bets, and and so all decisions were a product of the market, the marketplace, and I wanted everybody to be able to bet anonymously, because I knew that if whatever, however I bet, most people would have followed my bet. So I didn't want to influence the process. So I wanted everybody to bet, anonymously, and then there were rewards for the people who were the best at betting, because I was concerned about violating laws about betting and gambling and things like that. So I had to have my lawyer help me figure out how I can set up a market that wasn't in violation of actually even including labor laws. Having people, basically having a obligation to participate, in these markets. I had to structure in a way that that I was not violating, any laws. So it would not. The design was not necessarily as ideal as I would have liked it to have made, because a lot of the laws got in the way of me doing maybe a better job at its design. And as I branched out into other businesses, I got into real estate, and then, like, I owned some retail properties and commercial properties, and then I started even bringing my tenants into the prediction markets. So it was not just the employees; I brought my tenants. So I tried to expand the ecosystem of where I attained information from and how I learned. And again, I only wanted to hear from people when they had skin in the game, and if they didn't have skin in the game, I really was not interested in people's opinion. So because there's nothing at stake except minor reputational damage for being wrong, and I like people to have suffer more than reputational damage from being wrong. I want because then they'll be think more carefully about the consequences of being wrong. Where did you get? How did you first think about what got you interested in designing these types of markets?
So I'll say a bit about myself, but then I want to hear more about what you've been doing, because I actually don't know what you've been doing, and I'm very eager to hear more details. But I was a young person long ago, and I was an idealist, and I was associated with the people who were trying to make the World Wide Web before there was a web. And they had this idealistic vision that the web could allow what they called backlinks, which would allow you to find criticism of things from the thing. And they hoped that that would change and reform conversation. And I started to have doubts about the vision of backlinks and informing conversations, even though the web did in fact happen. And so I was looking for some other way to solve the same problem. How could we have healthier conversation? And then because they were somewhat rabid libertarians that I was hanging with, the idea of betting markets was available to me as a alternative solution. And so I started to explore that roughly 35 years ago, 36 years ago, I guess now. And so then I started to write about it, and I wrote some of the things you read and tried to pursue it. But I reached the limiting point where I wasn't in charge of an organization, couldn't get people to do things. So I had to go back to school to get credentials and to, have a better platform on which to think and write about those things. So, and then I found that I couldn't really make a career out of writing about that in academia. So I had to learn and do other things, which I have. But all along, I've been trying to, when I could, help push along this idea of betting markets for aggregating information in order to get more accurate estimates on whatever it is. And organizations has long been the obvious good, best application in my mind. That's where most of the value of decisions is in our world. And that's where most of the mistakes go, in the sense that we have some pretty broken organizations. And so if we could only have betting markets to aggregate information in companies, then we could do a lot better in those companies. And so that's always seemed to be a thing. And then roughly 20 years ago, there was a big burst of many companies trying this. And, we could go over their experiences, but unfortunately that wave declined. And now maybe there's a new burst now that we could talk about. But as you should clearly know, your experience is very unusual. That is, the vast majority of other organizations aren't doing it however you were doing it. So I'm especially interested in specifically what were some prototypical examples of things you had bet on that were important organizational decisions. And then as you tried to spread this to other organizations, what have been the obstacles?
Well, when given the fact that when I first started when I started my first business, I was 24 years old. So I built this risk management model. And my background had been, I started my career at Salomon Brothers. I basically did I traded some of the firm's capital, and I was very interested. If I was going to trade the firm's capital, I wanted to understand the risk profile of the firm. So I wanted to know whether my trading was exacerbating the risk of the firm. Not that I had an obligation to really do that or not, but it was a partnership, and I wanted to be a good fiduciary. So if there was a big bet that the firm was making, and I'm responsible for managing firm capital, I wanted to, if I was doing something that would make the partners feel the bet was bigger than they really understood it would be, that before I took that bet, that I would let them know. So and I realized how badly they did risk management. So at least in my opinion, and so I became curious about how banks and other Wall Street firms did risk management. I was kind of appalled by what I saw, and I built this company. And so I first started hiring people. So first after my partners helped me hire the first couple of people, then basically I used markets to figure out who should be the next hires. And then when we were building features into the model, and pricing the model, and almost every decision that had to be made to govern the company, I built a market about that. So people were including in the beginning. I added my first couple of customers into it, so I was constantly getting that input into what should be there. And
let's start with that first example of hiring people. What exactly was the market for hiring somebody? I mean, was it conditional on hiring them? Was it based on how long they would stay, or some performance metric? What were we betting on?
It was based upon how long they would stay and how well they performed. So basically, the return that people got was if somebody could survive, like there was some reward for basically being able to survive 6 months with me, because I was a very difficult person. So the expectation was that they would hire somebody that could deal with a very impatient, volatile founder. So
if somebody lasted 6 months, there's an asset would pay out a certain amount of money. There's a free market in buying that asset. Anyone could buy it. Anyone could sell it.
Yes.
So, and you generated these as was there a reverse side, like the one minus that asset in terms of like the opposite bet that you could buy instead?
Yes, you could go either side. You can go either side, in that market. And then there were performance metrics. So every job description had a performance to it, and there was a performance metric. The performance metric was not as precise as I would have liked to have been, but there was a consensus built around like oracles who would then define whether these performance metrics were met. So, and of the oracles, I would not be the
Is
oracle.
that a separate, or is that combined into the 6-month asset?
It was combined into the 6-month asset.
So then if they last 6 months, then it'll pay off in proportion to some performance metric.
Yes, and the performance metric was basically, independent third parties not affiliated with the company,
Right,
who would come in and basically.
Was that metric at a year, at 2 years, at 6 months? When does the performance metric evaluate?
Every 6 months.
Okay, so then somebody who has already been there 6 months, we have another asset on how they'll do in the next 6 months, and will it last another 6 months?
Correct.
Okay, so everybody always has a 6-month bet available that anybody can buy on, sell on anybody else.
Yes.
And their trades were anonymous then, so people couldn't follow your lead.
Correct.
And then you said you did this for features. So what would be the bet for a feature?
I would put in a feature and be bet on whether that feature would be. Every feature was an add-on, and there would be a price to that feature. So I built the base model, and then I would put features in, and all the incremental features took a lot of my time. And I didn't want to waste my time putting in features that weren't expected to have good returns. So, and each of them had a price on it. So I basically wanted to have people bet on the adoption of those features. So I wanted to figure out if people thought the features I was spending time on building would actually be adopted.
Okay, so each feature had a metric that if you implement it, you'd have some measure of its performance or value added.
Yes.
And then, are you betting conditional on adopting the feature, or just as soon as you start on the feature, you're betting on how it'll turn out?
Conditional on adoption.
So then the bets are called off if you don't adopt.
Correct.
And that's also true for the employees, right?
Correct.
Considering hiring them.
Yes.
And did you have some electronic way you manage these bets, or was paper pencil or?
Paper pencil.
Okay. And this was, what year are we talking?
1981.
1981. Okay.
Yeah.
And that was before I got into this area, certainly, because I started doing my writing in 88, roughly.
Yeah. And I didn't necessarily call it a prediction market. I think
okay, but they were.
For me, it was just a matter of how people could reveal their preferences.
And these prices were visible to everybody. Everybody could see everybody's prices.
Exactly.
Including the feature prices.
Yes.
So did that cause a problem? Like, were people fearing that somebody was betting against them and then going to sabotage them in their job or something? That's a concern people say they have.
No, I didn't find anybody really concerned about sabotage. I don't know how much of that is because of my management style. I mean, my management style, was pretty much. I used to tell my employees, the only time you and I should have a conversation is when you want to complain about me or you want my advice. So if it's not one of those two things, you shouldn't be having a conversation with me. I didn't even have a chair for guests in my office. So, because nobody was ever going to be in my office long enough to need to sit down. If they wanted to sit down and wanted to be comfortable, there was a problem because I didn't want to spend that much time listening to them. So I wanted to give advice and I wanted to receive criticism. So, because I wanted to figure out how I could grow, and that was it. And if employees ever badmouthed each other, I just fired them. So I created an environment where people, were I wanted to encourage cooperation, and I used to tell when I didn't have much of an orientation, but when I brought employees in, I basically said, because I'm Jewish doesn't mean I have the wisdom of King Solomon. If you have a dispute, I'm not wise enough to figure out which one of you is at fault. So any dispute, I'm thinking all the parties are at fault, and you're all fired. So people
that limited disputes, I presume.
Excuse me.
That reduced the number of disputes you heard about, I'm presuming.
Exactly. Yes. People tried very hard to, not not engage in disputes. And I really pushed cooperation. And the other way I also pushed cooperation was that I gave 40% of the profits I put into a bonus pool, and the bonus pool got allocated by all the employees, and they had to be unanimously voting for the bonus pool. So it was a pretty simple process. They had 2 weeks to every month. I provided, the financials to everybody in the company, and there was no organizational chart, so nobody had titles, and so everybody knew what current information about the status of the company, its financial condition, and so they could throughout the year they kind of knew what kind of bonuses that would be available to them through the markets, about the appraisal of their performance in the prediction, in the markets, where the oracles were basically determining whether people were meeting metrics or exceeding the metrics. They were getting information on really how others saw their contribution into the company. So then they would have 2 hours to get in a room, figure out the allocation of the bonus pool, and if they couldn't figure it out, then I decided. But but they had to pay me half the bonus pool for me to decide.
I bet they decided.
So they always decided, because they didn't want to pay me half for their inability to decide. So given the fact that it had to be unanimous, then basically people didn't really want to screw with each other, because they wanted to reach the consensus, at the time for their bonus pool. So I was kind of upset with how people, would continue to be cooperative in nature, because I didn't want headaches. So basically, it was a very selfish motive. I just didn't want headaches. I didn't want to deal with headaches. So I tried to design an organization to avoid headaches.
Okay, so I'm getting a picture here. You tried this very innovative mechanism before I even thought of it. Years ago, it made it work, but you also mixed your management style with a whole bunch of other idiosyncratic, unusual styles that worked in your organization. But now if we ask, why didn't it spread? Why didn't, say, employees who left you go and take the method somewhere else and getting it spread there? We have to wonder what went wrong, or why didn't you, when you bought new businesses, why didn't you spread this management technique to other things when you weren't the manager there? You couldn't convince other managers to adopt this in other places. I want to understand, what were the obstacles to spreading this technique elsewhere?
Well, my feelings, my feelings about this is, I think most people that run businesses have huge egos, and so they think their judgment is the best, and they tend to hire sycophants. So you have to be able to suppress your own ego, and you have to accept the fact that decisions will be made that you don't agree with, and you'll just have to accept that that's the case, that you don't have a special override if the marketplace thinks you're wrong. You'll have to accept the outcome of that. And I think most people that run businesses, do not want to surrender. They don't want to cede, the perks of governance. So,
and when you financed other new businesses and you found, qualified people to lead them, you couldn't convince them to not be so arrogant, right?
No,
in your negotiation with them, you gave up on that because you wanted a good person, you wanted to have a good business, and that was just not worth pushing for, right?
Well, actually, I don't want to talk too much about myself, but at least I'll answer your questions. For me, I started a couple of businesses, sold them for nice profits, and decided I just wanted to trade. So mostly because I didn't like the headache. Even the limited management effort I had to put into the business was too much of a headache for me. So I basically discovered I didn't like people enough to really want to, I cared about the people working for me. So I wanted them to feel fulfilled in their lives. So I wanted them to, I wanted them to get something more, enrich their lives more than just financially from their career. But it was time. It was a way I was allocating my time that I didn't enjoy allocating my time. I could allocate my time in ways that I enjoyed more, and I enjoyed. I just thought, when people would ask me, why do I like trading, investing, speculating, and anything else, my answer is always very simple. I don't have to sell anything to anybody. Okay. I don't have to convince anybody of anything. I get to market how well I'm doing every single day.
Right.
So there's an objective measure of whether I'm doing a good job or bad job. Am I getting richer or am I getting poorer? So and you have to be a quick learner, otherwise you'll get poor at a faster rate. So
Okay,
and it doesn't involve convincing anyone of anything. So
I'm like you in part in this way, but that should make us worry that this idea sounds good to people like us because it fits our personality style, but that other people don't like it because it doesn't fit theirs. So look, I'm happy to answer whatever questions you have, but in my mind, the key question here is we have an abstract idea, but we need to see what happens when people actually try it. That's how we figure out how the world works and whether it's actually a good idea. There's lots of ideas that are good in the abstract that turns out when you try them, they don't work out very well, as you well know, right? So that's the key question here. You and I both think this is a fine abstract idea, and you made it work for you in the context of your idiosyncratic, somewhat unusual organization and management style. But our key question is, how far into the world could this spread? What are the key obstacles? And in some sense, the people who have actually tried it are our main data point about what the obstacles are, what in fact is in the way.
How many people have you spoken to? I mean, now you see now. I want to. Are you hopeful? I should say first is that with the success that Polymarket has had, that maybe people will start looking at broadening and deepening the type of things that Polymarket has done. I don't know if you ever spoke to the founder of Polymarket.
I have. I've talked to Shane, yes.
Yeah.
But but there's been a whole decade's worth of history here that you may not know, which is that roughly 20 years ago, at least 100 firms tried out prediction markets inside the firm.
Yes.
And they got a lot of different experiences with that. What I understand from having talked to many of them and read about others is that the usual experience is roughly like the following. First of all, if you don't get some higher level management support for it, it just doesn't happen. Okay. Somebody higher up needs to be supporting the project in order for people to be willing to trade and to participate, right? That's just so we select out all the things that failed because nobody ever had enough support to make it happen. And then among the ones where you do actually have support and you actually have a trial, you have a number of different metrics. One metric is user satisfaction, and that tends to be high. Another metric is accuracy, and that tends to be good as well in terms of you compare it to something else and it does as well or better in terms of accuracy. Another metric is, does it continue? And by that metric, there's a problem because they tend to not continue. And a common scenario, several common scenarios. One is there's a system, it's celebrated. The person who started is seen as a visionary inventor. He gets promoted, and whoever takes his job ends it because he doesn't think he's going to be celebrated as an innovator, and it's not actually something he wants. And then often, I know when I would go consulting, we would say, look, what are your most important questions? And they would say, no, that's too sensitive. And they would try to pick something safe and smaller that they could do as a demonstration that everybody could say, yay, you for doing this innovative thing that wouldn't bother people too much. But then when they were done with it, they thought, we didn't really need to know that. It wasn't worth all that trouble. So they don't continue because they didn't really ask the questions that were important. And then the last thing I'll tell you is that if you look at application areas, the application areas that were the most successful were the ones the farthest away from anything management would express an opinion on. So for example, focus groups. If you had focus groups, but you did a market instead of a focus group, that was fine because managers are already used to not having an opinion about a focus group, we'll say. Or new innovation projects because they already don't have an opinion on that and there's nobody who has a stake in it. So fundamentally, the obstacle is management, if they have an opinion on something, and then there's this market speaking to the same thing they express an opinion on. Usually the market's right, they're wrong, they're embarrassed, they don't like that, and they want it gone. So that was, many firms roughly 20 years ago tried these experiments there. And so there's a data set of experience there, much more than just say the Polymarket betting on the election.
Yes.
And that's what I'm trying to understand the potential. So also I'll just say in the last year, there's a number of organizations that have started to use this in the crypto area as governance mechanism. And I'm hopeful there that will grow further there. So they're actually, a DAO, something called the MetaDAO. It has a budget and has people working on it, and then it asks key questions about governance to a market, which then gives conditional estimates of the value of their organization, conditional on which way they go. And they've done, 25 of those decisions so far.
Yeah, I have now thought about how to use, instead of using prediction markets, using tokenization. I'll explain to you what I mean by how I would organize a firm, through tokenization. I also will tell you just one piece of kind of trivia. I think you had an important role in the establishment of Polymarket, because I met Shane before Polymarket existed. He was doing some staking projects. He wanted me to invest in his staking projects. I thought they were garbage. I told him they were garbage. He asked me what he should be doing. I said, you should be doing prediction markets. He started asking me about prediction markets. And I said, look, I'll answer your questions, but the person you should really be speaking to is Robin Hansen. So
I'm honored.
I had a lot of lunches with him, and I gave him a lot of guidance. But I told him the person he would do better with is you, rather than with me, and really actually looking to. I could provide the general conceptual framework on why he should do it and why I thought prediction markets were important. But then I had him read your work, and I guess he got in touch with you. So, but I was the one that put the idea in his head.
Thank you.
His projects were garbage before that, in my opinion. But not. Right. But obviously, Polymarket has been a great success.
I am not a big fan of most crypto projects either.
So tokenization, I gave somebody from UCLA, from the film industry, heard me talk on Bitcoin, and they said, how would you use tokenization for movies? So I got invited to give this little talk to a group, and so this is kind of how I would structure. If the security laws let you do this, which unfortunately they don't let you do, so the impediment in many cases is the law itself in implementing some of these things. So, and I could give a different example with respect to completely decentralized Uber. So first I go with a movie. Okay, with a movie, think about a movie where instead of going out having a producer and raise money, think about a movie where somebody goes out and says, oh, Tom Cruise is going to do Mission Possible 27. Okay. And so and now if you want to have a role in it, you get an allocation of tokens of, percentage, and you'll figure out whether that's valuable to or not, because you're going to figure out how profitable, Mission Possible 27 will be. And everybody will say, okay, 100% of the token, I think 100% of X billions of dollars, this is fair compensation for me. Now, the people who are, doing the work that's worth, less as far as how much token allocations, might need to pay rent and pay monthly bills. They might not be able to have all speculate, but then now think about it as if every token got listed on an exchange, and now film goers could also participate. So I'm a gaffer or whatever on a movie. I don't even know what a gaffer is. I just see it in the credits. Yeah. But I need some money. I got to pay my mortgage. I got to pay my rent. I got to pay my kids' tuition or something like that. So I need to convert I don't really want to sell all my tokens, because I want the upside associated with participating in this, as opposed to the downside of being paid in dollars that are going to be worth less the minute after I get them. They're going to be debased in value. So I get something that I think I'll get a form of payment that hopefully will increase in value, as opposed to one that'll be guaranteed to go down in value, since its purchasing power is guaranteed to go down, since we only have inflation, not deflation. So, and then I can imagine where every month Tom Cruise can do a trailer, a 30-second, 60-second talk about why I'm so excited about this new Mission Impossible movie. And then the millions of people who want to go see the movie, they now can get a piece of the movie by buying the token from those who got the initial allocation of tokens, but those who need some liquidity. So how do I see this working? There'd always be a market. Movies that are expected to be successful, people will, the film goers are going to buy the tokens because they think it's going to be a success, and they provide the liquidity for the people that need liquidity. For the movies that are going to be a failure, there'll be no secondary market for the tokens. So instead of people going and continuing to put more money into a movie that seems like it's going to fail, since people, the token won't be worth anything, and if people observe the token worth moving, they'll allocate their capital to some other project. So basically, we'll have a more efficient bankruptcy process. The bankruptcy process will not be, diverse creditors arguing over where they are on the cap table. It's a whole bunch of people said, I committed to, allocate time to this movie, but I'm surrendering my token because it's a waste of time. Find some other idiot who will take this token and might believe more in this project than I will, but I'm surrendering the token because I don't want to continue to contribute, to the movie, and I'll allocate my talent somewhere else. Think about how better if one is. It eliminates it doesn't mean that you have disagreements on strategy, but now you get rid of the principal agent problem. Everybody's a principal. So everybody's interests, are aligned.
You will reduce the principal agent problem.
Reduce
some of them there, of course.
Yes.
Are you aware of the Hollywood Stock Exchange?
No.
So in the aughts, there was a play money betting market on movies.
Oh, they made it illegal though, right?
Well, so first there was a play money market on movies, and then they did very well at that, making a community and making a lot of good estimates about what future movies would work. And then the principals decided to try to make a real money market. They went through several $1 million worth of regulatory hoops to set it up, and then I guess that what happened is the movie industry lobbied for Congress to pass a bill to make movie futures illegal, which is the only other time that had happened in the past was onion futures were made illegal back in the 50s or something. So the movie industries went out of the way to lobby Congress to make this particular kind of futures illegal so that the Hollywood Stock Exchange would not be illegal. And that's how that ended.
Yes,
it wasn't illegal before they tried to do it.
So I think that many businesses, you can set up businesses in a way that people don't need to raise cash. They can get capital and they issue a token. And then, think about, like in the case of the second example I'll give is like Uber. Okay. Now, in my ideal world, Uber would have been founded by each driver getting Uber tokens. So, and there could have been some mechanism, because that's like proof of work. In the beginning, there were not so many drivers. You're driving, you're contributing to Uber. Your proof of work is how many hours you're putting in, how many miles you're putting in. That's your proof of work and your contribution, into Uber. In most companies that were not gig companies, if you come in at a low level, you get some allocation of stock. And if the company, so you take a risk on a young company and it goes well, you'll get rich. In the gig economy, the gig workers got poorer. They first were the first movers, so they made good money driving the first year. They made not bad money the second year, not horrible the third year, and by the fourth or fifth year, they're basically earning minimum wage. Right. Because of all the other drivers. So the people who helped contribute to Uber's success saw no benefit, from little benefit from the proof of work they made to help Uber be successful. So maybe an alternative model would have been, maybe then if Uber had just issued tokens to drivers, and then who would be the natural buyer of tokens? From the Uber drivers or the Uber passengers who believe in Uber and they want to own a piece of Uber. So every passenger, and now the passengers are stickier.
Absolutely.
Because they own a piece of Uber, so they become stickier with respect to Uber. So but the law doesn't let you do this.
I think you and I both agree that we face excess securities regulations, which makes many of these securities models much harder to implement because of the high levels of regulatory scrutiny and rules that limit how you can implement these things. But predictive markets within firms are not illegal.
Right.
So we can't blame the regulators for that so much. So that's why I'm more interested there in asking what are the organizational obstacles, because the regulators aren't so much in the way. I think the main obstacle isn't so much gambling regulations as insider trading regulations, in the sense that if you have an organization that could potentially have insider trading, then you have to find a way to keep the inside information insulated from all the other people, and then the markets could break that barrier. Internal prediction markets could make it easier for inside information to leak into the rest of the organization. But aside from that, I think it's not really mainly a legal barrier. It's an organizational cultural barrier, which is why lots of people haven't copied your success. So you must have had at least dozens of people who knew about your methods in your organization, and all those people went elsewhere, but they did not take it with them and copy it there.
Yeah, I mean, none of the people who were my employees went somewhere else and copied the model, and some of my clients who ostensibly at the time seemed to have a lot of respect for me, nor were they, because they would pay for my advice, but none of them would copy, my model, and I would speak to them about that. I mean, I don't have a big sample. But whatever
Right.
sample I have is basically, my feeling about, human nature is the impediment. And what's the nature of human impediment? For markets to work, most efficiently, and to be fair to all the employees, information has to flow, independent of where you are on the organizational chart. And many people have a problem with that. So, there's benefits, given how compensation schemes work, there are benefits to being on some hierarchy and having privileged information. And to the extent that there's hierarchical benefits and information privilege benefits, that deters there being a really efficient market, because it becomes an insider market, because many of the other people participating in the market don't have enough information and won't trust the market, because they won't have the information that other people have that they think will be useful in making a decision.
So it seems to me there's an analogy with hostile takeovers. That is, it would seem like allowing hostile takeovers would be in the interest of investors in firms, but nevertheless, the usual deals that investors make with founders end up not allowing hostile takeovers or making them harder through poison pills. And that seems another way in which investors compromise with founders to give them this extra sense of control and security. Doesn't seem to be overall in the interest of the organization. It's more in the interest of the pride and, feelings of the leaders.
Well, we have a system of very imperfect incentives, and there are ways of making incentives better. The question is, the people who have the bad incentives by design, because they profit from the bad incentives. And so the question is,
the design was a compromise between these people who want to have the bad incentives and other people who are funding them, who have the opposite incentives. So it's puzzling that the compromise ends up being in that direction.
I did a deal. I did when when Mexico had problems in the mid '90s, when they had the big crisis of the after Salinas and the transition from Salinas to Zedillo, we had 100% inflation and 100% interest rates for a year, whatever. I was buying up real estate in nice neighborhoods for people who were fleeing the country because they owed the banks a lot of money. They fled to the U.S. They wanted as much liquidity as possible. I had liquidity and I could close quickly, and so I bought a bunch of real estate very cheaply. So then I started developing. I wanted to develop the real estate. So I had people coming in, big funds from the U.S. that wanted to partner with me in developing the real estate. So they came up with the structures of how they're going to compensate me as a developer, and they were going to pay me all these fees. So I had to put up like 5%. I actually, in the structure they came up with, I had to put up 5% of the equity into the deals. But if I did everything, if I did the architecture, if I did the architecture supervision, if I did the construction supervision, if I did sales management, if I did the sales, the total amount of fees I could get out represented about 12% of revenues. So basically, as long as the product sold anywhere ever, the project could lose money, and I could double my profit. So I went to think how stupid this is. Okay. I go to, but this is again, their incentives. I go to my partner in the deal, and I say, look, I don't want these fees. Okay. I want a lot more of the back end. So pay me no fees. They said, yeah, but if we go back and we tell you you're not going to take any fees, part of our excuse to going to our people who give us money to collect big fees is we need to pay people like you big fees. so that we can't get the best people if we don't pay them big fees. And that's the explanation we give. And I say, well, I don't care about that. I just want to make more money from my expertise than the structure you have. And I'm willing to let you keep more of the fees in your pocket in return for more of the back end in my pocket, because I'm looking at my total expected return and I want to maximize my total expected return. I'm not looking to minimize my risk. I'm already comfortable with the project. I bet in it, so I'm comfortable with the risk I'm taking. So you just think about how what do you think about why is somebody who managing so much money hiring managers where they have the bargaining power to why are they accepting these types of compensation schemes? I really don't understand how bad it was with this company. This company, I did a project. We argued over the price list. So I wanted to charge higher prices. They wanted to charge lower prices because they wanted to outperform so they could really impress. If they got a 14, 15% return, they were going to be heroes with all the people that gave them capital. So I said, look, I'm your partner. I don't want a 14, 15% return. I'm looking for 40, 50% returns, not 14, 15% returns. I don't accept your price list. So we argued over the price list. So I finally just said, I'm stupid arguing with them over the price list. I'm just going to accept their price list, and then I'm going to buy all the units myself. So, so I accepted their prices. I bought almost all the units myself. And then, of course, by the time the project was ready for delivery, the prices had doubled. So, so I made a lot more money than they did. But it's all a function of the incentives the people who wrote the check gave to them, and the incentives that they had, and their incentives were to be more in the fee business, because I guess they didn't really have confidence in their ability to pick projects that could earn above market returns. So they at least wanted to mitigate their risk by being in the fee business. And the people who were allocating money to them, they're just as dumb, and they also want to mitigate their risk. And so they end up all accepting this fee-based structure. And so from the first person who makes the first check. So then the question is how do you build better incentive models? When this behavior is rewarded in the marketplace.
So we've so far described two big obstacles to improvements in the world, in the worlds you're in. One is regulation that limits the movie token markets that you were imagining. And we understand how SEC regulations make it harder to do that. And then another limitation is somehow investors have a relationship with their investors such that their incentives are screwed up with respect to the kinds of deals they can make with you as a founder or a manager. And so then we want to wonder, when we see your great experience with prediction markets, but not getting spread around, we wonder if it's one of those two explanations or this third explanation of just a psychological mistake people are making. And if it's the mistake, then you might think then the investors who know about the mistake could push a little harder to get managers to accept different deals that give the managers a bit less autonomy, but still a lot, right, compared to everybody else in the game.
I don't think it's a psychological mistake. If you think about how much money is in the business of, making acquisitions, like, for example, the example you gave, the reality is if I'm a firm that develops a reputation of being very difficult, then I won't get deals. So I got to be able to get deals. So I got to be perceived as being management friendly. And if I'm not perceived as being management friendly, I'm not gonna get a deal done. So so given the fact that that's what their reputation is when you go out and you say, gee, you should do a deal with me. I got all this money behind me, and I'm going to nurture you, and I'm going to be a great manager. Speak to all these other people, who I invested with, and they'll tell you what a wonderful guy I am, or wonderful person I am. So it's building that reputation of being management friendly.
But apparently
I'm management neutral. It's not good. It's not good to be management neutral, because then management will say bad things about you. When they don't perform. And you remind them that they're not performing. The issue is not whether they're performing or not. The issue is you calling them on their lack of performance. So people want to get deals done. Their deals are structured where they basically have this quote carried interest, which is just free options they got that have preferred tax treatment to them. They're all long-term capital gains. So they want to just get deals done, and they want to be friendly with management so they can get a lot of deals done, because they assume that most of the deals won't be very successful, and they need to go, the few that'll be successful will be the ones that they make their money off of. So given the fact that they're not looking to make money in every single deal, they're not playing with their money, they're playing with other people's money. If you take a look at all those incentives, then their behavior is very rational.
Okay, so we're having this image where there's a manager who's starting a venture or wanting to grow it, and you're an investor coming to them. And if you come and said, look, I've got money I want to invest, but a condition is that I want you to have some prediction markets in your organization, they would consider that management unfriendly because you're messing with their territory. They just want you to give them the money and let them run their territory and you not mess with it, right?
Well, actually, when I started doing venture capital when I first made some money. So when I first made some money, I wanted to help other people make money. So, I had mentors that helped me grow. I wanted to do the same for other people. So I had some interests. I wanted to find people who had interest in the things I found interesting, that I didn't want to allocate my own time to, but I wanted to subsidize somebody else who wanted to allocate time to something that I found of interest. So I did tell people that they had to implement prediction markets, and I also offered them more upside than anybody else. And yet I got very few people to say yes to me.
Because this put them off. They thought this was meddling or they thought it was risky to them personally somehow.
Well, they didn't. Most of them did not want to delegate judge. And explaining to people how that on the most part people will not outperform markets in making decisions.
Right.
And so that concept, that philosophical concept, even though nobody had a basis for being able to demonstrate they had a history of outperforming markets, they had a belief that they would outperform markets. And that's part of one of the many cognitive defects that individuals have, amongst many, is overestimation of their own skills.
Okay, so I have an idea here that hasn't been tried yet, but if we say the key thing is that the manager has a sense of their sphere of control and they want you not to mess with that. But if there's things outside of their sphere of control, they might be more open to prediction markets there. So there's this relation between the investor and a manager, which is the manager says, I'd like more money now. And the investor often says, not yet. Or I'm not sure you need as much as you say. In that connection, we could imagine prediction markets to manage that relationship. And now the manager isn't already in control of that, right? So
Right.
The investor might say, look, I'm going to set up in prediction markets and you'll get more money when the prediction markets say you should.
That's
my deal with you. And now maybe the manager isn't so bothered by that because he already wasn't in control of when he got more money. The investor was, but the investor doesn't know when to believe that the guy really needs more money or should get more money. And so maybe the investor could trust a prediction market to advise the two of them about when they can get more money.
Yeah, I like that idea. I hadn't thought about that.
Okay, so it's not crazy, but the strategy here is to figure out what the boss doesn't think he's in control of and put a prediction market on that so that he's not losing any control.
Right, he's gaining information, not losing control.
Exactly. That's how we want to frame the things we add here somehow to be in that category. If we can find more things like that, maybe his relationship with suppliers or maybe some long-term customers, he's not in control of those either. So if we could put a prediction market to manage those relationships, he might be okay with that too.
Yeah, that's an excellent idea. I like that.
All right. Well, we'll try to see if we can pursue it.
Yeah, I would really like to think about where I could apply that.
Well, we could, again, you just list the relationships they're not in full control of, right?
Yes, yeah, that's what I'm thinking of. Of the next
suppliers, customers, investors, yes. All of those relationships they're not in full control of. You're not taking control away from them if you suggest having prediction markets manage some of those relationships.
Yeah, that's an excellent idea. What are the
I,
priorities of the things you want to spend your time on? Is this prediction market, of seeing prediction markets used this way, is that the project most important to you, or what are amongst the projects that you're working on? What are the things that are the things
so
you're most
I'm a
important?
tenured professor, so I get to think about whatever I want. I have a lot of freedom in the time and how I allocate it. It's a nice deal. It's not a luxurious, wealthy deal, but it's a rich world, so I can live comfortably that way. And I've always thought that these sorts of prediction market applications were my best idea. So if I look at all the ideas I've had and I say, try to weigh them up and I go, look, this idea has just the biggest potential compared to all the other ones, mainly because it could make all the other ones go better. That is, once you have a better way to make decisions, you can make better decisions about everything else, not just corporate investment, but every other key question we have, we could make better decisions there if only we would have a better mechanism for aggregating information to decide. So that's why I think it's my best idea. So I have always been ready to go back to it whenever somebody was ready for me to help them. But there have been long stretches where nobody was interested in my helping them. And I don't, run an organization and have a lot of capital or something. So I really can't make things happen unless somebody else is doing something and then I can help them. So at the moment now we have a resurgence of activity here. So now I'm happy to allocate more of my time and attention to the projects people are doing. And of course, for you, I'm happy to hear about your previous things, but I'm also like to push you a little to maybe, go back into HIS and see if you can get some relationship where you could get somebody doing something like this, because you have great experience, obviously, and insight. You've done it. You see how it works. It's not a hypothetical thing for you.
No.
Right? You've done it. So that's a big leg up you have, clearly, on everybody else who might think of doing something in this space. You have a sense of it worked. You saw it work. You know the context to which it worked. So you could somehow make a context like that then had a decent chance of working somewhere.
Yeah, I'm gonna get this very serious thought, and offline, you and I can have a
Sure.
conversation on this.
But I have lots of other things I'm thinking about in all these gaps of time when nobody wanted to do things. For example, a couple of years ago, I did this stuff on grabby aliens, where aliens are in space-time. I don't know if you read about that, but there's a couple of million view YouTube videos out there describing that. And then roughly 2 years ago, I got into thinking about fertility decline as a big issue. And then I decided that underlying that was cultural drift as a problem. And so for the last 9 months, I've been focused on cultural drift as a big civilization problem we have. And then maybe prediction markets are one potential solution to that, which is making me bring them back as a connection. But I have these 2 books, The Elephant in the Brain, Hidden Motives in Everyday Life, all about why we're wrong about lots of our motives. And that's, I think, an insight into just human nature and the human condition. And I do recommend it. It's good. And then I had a book.
Also, it's an excellent book.
Book before that, The Age of M, which is a futurist book about, which is now more relevant because many people think the scenario I described here of a certain kind of AI is related to maybe the kind of AI we're going to get soon. Many people think. I'm more skeptical. I don't think it's coming that soon, but eventually. And so I've lived a long, rich life of thinking about many topics, but I still have to say, when I go back, when I look at the ball and say, what's the best? I go, okay, yeah, decision markets, that's the best idea because that has the biggest potential. And so then I go, well, why can't we make it happen more? And I go, well, I'm just one person and I can talk, but there's a lot of other things have to happen in the world for stuff to happen besides one guy talking. But I'm happy to talk and help when I can.
What's the status of Futalky?
So, as I said, there is a single DAO, distributed autonomous organization in crypto, that has been using it for roughly a year to make 25 decisions and continue. And now they have a couple of other DAOs that are their clients they're using this decision mechanism to advise them. In addition, a little earlier, there was a India-based government organization that's been using Futarchy to advise its key decisions for healthcare choices, but they're very secretive and they don't want to say anything to anybody. So, but I presume they're still doing it, but whoever was serving them was now looking at other government organizations who are interested in being clients of that. And then in the last few months, a couple of other new crypto organizations have formed, one of which I've agreed to be chief scientist for, which are pursuing the application of Futarchy in organizations, mostly crypto organizations. So I'm not a big fan of crypto in general, but they got so excited doing these distributed autonomous organizations, which are just really badly run. So there's a really big opportunity for doing better governance when you have a sphere of badly run things. So just doing decent can look better there. So, that's an opportunity. But I think just the general idea is this technology has such a wide potential. You just want to be opportunistic about applying it anywhere that you can get a track record going. So then you can spread it somewhere else. And it's just a random thing about where it will actually get traction. I don't think I can predict very well where it'll get traction. I'm just going to try to help everybody who tries to get it traction somewhere.
If you would look at which government agencies do you think that should be, and maybe all of them should be designing,
Absolutely.
Prediction markets for.
Well, so there's a couple of indicators we can talk about. One is just how badly is it being run now?
Right.
So you'd like to fix something that's being really badly run, obviously. And the main way you're going to do it is by having a concrete metric of outcome of performance. And so then you might ask, where can I get clear metrics of performance? But you can get decent metrics of performance for a lot of them. Like for most police agencies, you can talk about crime rates. For health agencies, you can talk about lifespans and mortality rates. For, even say the Fed, you can just talk about, the state of the economy. So, for example, I think the Fed is probably not that badly run, but it has a nice clear outcome metric and nice discrete decisions. Every few months, they make a decision about raising or lowering the interest rate. And then you have the clear outcome metrics that in a few years, you can have some average of unemployment and, GDP and those sorts of things. And you could just do a prediction market on the state of the economy, conditional on whether you raise or lower interest rates or make the other Fed decisions. Again, the key thing is just to have discrete decisions that you can tell which way you went, and then an outcome measure that you say, this is the thing we want. And a lot of government agencies have that, but you want to be opportunistic. You're really going to probably have to try it with a town somewhere. Or like I said, there's this India government agency that's actually doing healthcare metrics like infant mortality, things like that. And they're making concrete choices about, opening on Saturdays or whatever it is in their industry, in their agency. And they're doing that now as a government agency. So I think it's less about suitability and more about just having an opening, like finding somebody somewhere who's willing. Now, this was a problem. So I told you there was a lot of government companies that did this like 20 years ago. So one of the woman who was a salesperson for one of the firms who was selling consulting to them, she told me the following privately about her clients. She said her prototypical client was somebody in an organization who was kind of unhappy with the bullshit politics and wanted to use something like prediction markets to cut through the bullshit. And she said this was a bad side about how long they were going to last in the organization. They were, disgruntled basically. And
Yes.
So unfortunately, she could get a series of disgruntled customers who weren't going to last in the organization. So she wasn't going to get, long-term growing customers because you're going to get a series of disgruntled people, right? So that's one of our key problems here, you see, is, you don't want to just cut through the bullshit just for somebody's pride because they wanted to cut through the bullshit. You need an organization that wants to cut through the bullshit. They need better estimates.
Yeah, I think that unfortunately, too much money is made bullshitting that people don't want to cut through bullshit. But
yes,
I know I have one friend has some peripheral involvement in one of the new agencies. I mean, the agency from the incoming administration, and if you don't mind, I
would be happy to talk.
I'm gonna introduce you to him.
So here's an intriguing thing. Imagine an antitrust case, like apparently they're doing with Google or something right now. Basically, you could have a metric. Okay, do we break off Google or whatever it is? And we could ask, what's the state of that industry in 10 years? Like, conditional on breaking up or breaking apart some firm that you think is too big. Is the industry actually going to be healthier in 10 years as a function of revenue or, customer, surplus or whatever you want to metric in 10 years? Right. That I think would be the right metric for antitrust.
Yeah, I think so. Well, I don't actually, I don't believe in antitrust. So I think
right, but you got to give
the
you
only
got to
answer-
give the people who do believe it something, right? You have to, you can't just dismiss them. You want to say, look, okay, what metric do you care about that would be the metric you're willing to make your decisions on? And then we will try to, if we're right, the markets will agree with us. But if we're wrong, they won't. And we should be open to the markets disagreeing with us.
Yes. I'm going to, we had offline. I'm going to contact a friend of mine and see if he's willing to speak with you, and it's
Happy
strongly
to talk to
urge
most anyone, as I
that,
said.
that he speak with you. And I'm sure that it'll be a good conversation for both of you. I think that would be, I think that you could add a definite insight that they're not going to hear from other people. And it's important that people hear insights that are not echoes of each other's, but
Right.
are points of view they're not going to hear from many
This
others.
is a problem, though. So, I'm around a lot of libertarians where I'm at George Mason University. It's famously somewhat libertarian in the econ department. So a lot of libertarians like this idea when they first hear about it. They go, oh, I like markets. You've got a market-based solution. That's great. Let's do your thing. And then they think for a minute and they go, oh, wait, your market might not agree with me. I'm going to open up this policy question to your market, and the market might not give the answer I want. Once they realize that, they're a little less sure they want to support having markets. For a lot of the people who are going to lobby the incoming administration, you see, they think they know the right answer.
Yes.
And they want to lobby them to do the right thing according to their estimate. They're less interested in asking the question. So it's the same in most organizations about A/B testing or experiments. Even today, very few organizations ever actually do experiments because nobody wants to admit they don't know the answer. Whenever you have a question, you ask around and say, okay, who's the expert on this? There's always somebody who's supposed to know the answer to your question. And they can never say, I don't know, let's do an experiment, because that means they're admitting they don't know. And the same way for advising government incoming administrations, you need somebody who's willing to say, gee, we don't know the answer. Let's do this thing to find out. But that's not how the game's being played. The game's being played of all these people saying, I know the answer. I know the answer. Come trust me, put me in charge because I will do the thing that is the right answer and believe me.
Yeah, I don't know my experience with I used to consider myself a libertarian, but now I consider myself an either minarchist or anarchist.
Right.
I don't think libertarianism is sustainable. We started off as a libertarian country. We haven't changed the
Where we are now
very much, and look where we are right now. We're in a country that
right.
basically our government interferes more in the life of the citizens today than the monarchy did. Not many houses were not many places, were having to host British soldiers. But now everyone hosts the U.S. government.
Exactly.
They're surveilled by everyone. So everyone is hosting the U.S. government, in their house. And these type of tax rates that we have today, what had, the type of taxes that had people that provoked the Boston Tea Party were significantly lower than the taxes we have today. So,
I think we should have information ideologies. That is, most people's ideologies are about, say, being more libertarian or more socialist or more something else in the policy space. And I want my position to be at the information level. I don't want to have a position about the policy. I want to have a position about what structure we should use to figure out what to do. That is, what information institution should we use to make these decisions? That's where I want to have my opinions there. And if we could get more people to have their opinions there, then we could actually be arguing over, okay, what institution should we be using to decide the answer?
Yeah, I think you and I are very much aligned. I try and tell people, elections shouldn't matter so much because it's not as if, if we take a look at how much money we spend, how it's allocated, the election is not going to significantly change how we allocate government spending. So our role will not change much. It's not going to change much. We have to take a look at the fact is that we're a nation that has. Can we look at a process? Anyone who looks at this process and say, with $36 trillion of debt, fiscal debt, and to about $200 trillion worth of unfunded liabilities,
right?
And we have no conversation over any of this, except that deficit will continue to grow, both in this stuff, and not say the problem is a systemic problem, and it's not a problem of who is occupying, you change the parties, Democrats, Republicans, Democrats, you change the party, the result is still the same. There's more surveillance, there's
Right, but
bigger deficits.
most voters can hardly have an opinion on who to elect. They don't have an opinion on systems. They're not really capable of having opinions on systems. That's the problem with having democracies. You're just not going to get the median voter to be thinking about systems. So you need a different system.
So if you think, and I know that I think Brian Kaplan has made this argument about the fact is one justification for libertarianism is you don't want government doing very much because most voters are low information voters, and low information voters are
Right.
going to make bad decisions. I remember one time I was at this black tie event, and I hosted a table. And this is years ago. I don't wear black ties anymore, but this is when I was in my 20s. And so because I had a table, I had a few members of Congress at my table, and hoping that I would contribute to their campaigns. And so I was speaking to one of them about school choice. And the person tells me, well, I think my parents in my school district make bad choices. So I got to take their choices away from them because they're not good at making their choices. And I said to him, I said, aren't you a product of their bad choices? So basically what you're telling me is the people who voted for you are people who are who have bad judgments, who make bad decisions. So you're telling me that you have the ability to be coercive over me, and you're a product of basically stupid people who you think are stupid, who make bad choices, and you're the bad choice that they made. He just got up and walked away. He didn't want to engage in a conversation with me. He just got away. So
my paper on futurarchy, the title is "Vote on Values but Bet on Beliefs." So that would be the slogan. Look, let people still be in charge of democracy, but what they vote on is the outcomes they care about, how much trees count and leisure counts and all that stuff. But then the betting markets decide particular policies based on their estimate of the consequences for those outcomes the voters decided on. So, I think in fact, look, with government administrative agencies, we already have this division where the voters set overall policy goals and the administrators then go set the policy details. We already have this distinction between voters setting values and then experts setting beliefs. But instead of having bureaucrats set these beliefs, I'd rather have speculative markets set the beliefs.
Yes, and markets can help solve a lot of the problems. If you look at how much I remember when I did some analysis for Friedman when Reagan was elected president, and I discovered that basically there was a very simple way of solving the Social Security underfunding problem. I said, don't bother having Greenspan head this commission. I got a better idea. I've done a little market test that I've simulated, applying that would now be called experimental economics.
Right.
And I discovered that people would take a very big discount to their promised payments in Social Security to get their money today. So I basically said you could just fund the obligation. I said, basically, what I discovered was the amount of money that Social Security had, was more than what people would take so basically the government could profit off buying back people's claims and still have money left over for themselves to reduce the deficit. So
that makes sense to me, but then they would lose their justification for their existence.
So
that's basically going out of business and handing your customers their fees for your services.
What your basically experiences, which is similar to mine, is that the problem with many libertarians is a healthy dose of hubris has them abandon their libertarian principles because they think they're the ones that have superior judgment to the marketplace, and so it's just everybody else's judgment who is not better than the marketplace, but their market. So they're also part of this elite that doesn't want to trust markets and would rather trust their judgment over markets, even though it's basically been shown that really people don't outperform markets, and the few that do have never run an organization like the government, and likely if they ran an organization like the government, they're not likely to allocate capital in a way that would outperform how markets allocate capital.
Were there other questions that I distracted you from asking, or because I know you had some initially, and then I pushed you in different directions.
No, this is very interesting to me because you're getting me to think about things I don't normally think very much about. So you ask provocative questions that get me thinking, which I enjoy thinking. What are the things you wanted to? What else would you like to talk about in the remaining minutes of this podcast? What are the things that you would like to say? Are the questions I should have asked you that I didn't ask you that you would like to talk about?
Well, I guess you have sort of a, hands-on lifetime of experience view, and that's how you're talking. And I'm more of an academic talking abstractly. And so then that's the bridge for us. The gap for us to bridge is I'm trying to get you to sort of generalize from your experience, i.e. to sort of step back from the life you lived and the things you saw to maybe draw some larger conclusions about your world that I wouldn't be able to draw because I haven't seen your world. And presumably on the other side, you're trying to get me to think about more concrete particular opportunities and things that happen because I'm more lost in my abstractions.
How much, what topic? I think you've written about this, but I'm not sure about the replication crisis in science.
Right. So there was a project 10 years ago that was continuing to try to see if you could predict which papers would replicate. And what they found is they could use prediction markets to predict it, but they could also just use polls to predict it. In fact, it's not that hard to predict which papers will replicate. And what I was hoping was that we could get academic journals to use that as part of their filtering process for publication. That is, they should not to publish papers that are less likely to replicate. And if we could get them to publicly say that they were going to look at these market estimates of whether things would replicate, then we could not only have a better set of papers published, but now have a way that prediction markets are being relied on in the key academic process of generating, prestigious publications. The problem with that is the academic journals did not want to do this. They would rather publish sexy papers that don't replicate, which is what they are doing, rather than somehow not publish a sexy paper because it looks not so likely to replicate. So what that tells you is that it's harder to reform academia than you might have thought. You might have thought, oh, there's this set of researchers, say, but then there's these other people nearby who have good intentions, and if only we can inform them about how they should structure their interactions, well, then everything will go well. But the journals are not those parties. They are just as much a player in the game as the researchers are. And I'd also say the funders are also just as much a player in the game. You can't go to the funders and say, hey, here's a better way to fund progress in the long run, because they'll say, look, the way I'm funding now gets me the prestige association that I want. Your way of funding might make more progress, but I won't get my association. And so they're, again, all in the game. So I'd say academia is this world where people are pretty much in equilibrium in the sense that each player is getting roughly what they want out of the game, even if the overall consequences aren't so great. And so it's hard to reform academia with prediction markets or not, but I think I have a way, if you want to hear it,
yes.
Is I'd say the thing that academics won't give up on is the claim that the people they most celebrate, like the top people at Harvard or whatever, are the people that historians looking back a century or two will say were in fact the most important thinkers of the time. The thinkers who had the biggest impact or should have had the biggest impact if they were listened to. They won't give up on that. So that's my lever. If we could make prediction markets in those long-term evaluations centuries later about who was in fact the most important people today, we can make prediction markets in that, then we could shame Harvard or whoever into not having much conflict between the people they pick and the people the market estimate to be those people.
Right.
You see? And now the betting market would actually be looking at long-term impact and actually judging who has a chance of long-term impact. And then the academics who are giving out money, who are giving out jobs or publications, they would be reluctant to deviate too far from the market estimate of who the market says is likely to actually be important. And that would be the discipline that would make academia pay more attention to what really matters. And the way to start this is just to fund some historical studies of the past, where you can just show that hiring historians to study academics 2 or 3 centuries ago, that you could in fact rank them in terms of who was more important, and you could do that several ways and get reliable results. Just show that you can, different groups of people using different methods, they wouldn't differ too much in their rankings. Then you can prove that if you set up a prediction market now about the future, that similarly we could believe that they would also have reliable enough rankings, and then again we would believe. So once you set these markets up, you see Harvard, et cetera, has the choice. They can either just ignore the market prices and hire who they want and deny that the market means anything and say that's just noise, nobody knows anything over there, or they could go better the market and move the price to what they say by putting their money where their mouth is,
right.
You know, having a stake, which would be fine with me. Or they would embarrassingly move their choices to be in line with the market because they're not really willing to believe the market's wrong. And that would be great too. So that's my vision for how we could reform academia with prediction markets. It's a little harder than reforming other areas because I have to go with this long-term judgment thing, because I think that's the key lever. The other levers I've thought of just don't work.
Yeah, that's you know, I'm concerned. I think you and I are concerned about the same type of issues, in the sense of, you know, I know you've done a lot of work in signaling, and you know, and the question is, you know, and when we talked about the fact of, you know, what you've mentioned in the past, like people, you know, people like status, so people do things for status,
Absolutely,
for things like that, so what
right. So
what
that's
what sacrifice is authenticity. So people are not authentic.
That's an opening for us, though. If we
get money, they're authentic, because if they're wrong, I mean, that the best guarantee of authenticity available to us is skin in the game.
But a lot of people want to deny that because that won't work well for them. And in fact, the larger world consensus doesn't think that much of skin in the game. Skin in the game is not given high respect in that many places in the world. So we face an uphill battle getting other people to respect skin in the game.
Well, I'm going to, and this is, you and I have to speak more offline, because I want to pursue several things that we talked about today.
All right.
And I want to introduce you to my friend who has some involvement in the transition process, and have you speaking with each other, because I think you'd really enjoy the conversation, and I think, you know, you could be of
all right,
help.
Well, I've enjoyed our conversation, and thank you for talking. And I'm just surprised I didn't know anything about your story. So I'm just delighted to have heard your story. It's a wonderful story that I will hopefully be telling other people about. The guy who tried prediction markets out in the early 80s, made it work for his company, but somehow
never convinced anyone else.
Right. Which is something we need to understand. Why? And that's something maybe you could understand better than the rest of us, to reflect on what was it about your experience and your style and your associates that made it hard for you to convince them to try.
Yeah, I think part of it is, just to answer that question, is I don't put effort into convincing people. I mean, being truly a libertarian, I put a lot of effort into explaining myself.
They should have been greedy enough to see it working and greedily want to copy it, regardless of you trying to convince them.
You know, I would have thought, you know, I met this person. A friend of mine hosted this, has sponsors this I think they used to be called Intelligence Squared, and now it's called Open to Debate.
Right.
You know Robert Rosencrantz?
I do. I know about him. Yes.
Okay. Yeah. So he and I are friends. I once was a donor to Intelligence Squared, but they haven't gone. I think they're too mainstream. So I told them when they go, I'll give money again when they don't get the same, you know, establishment names over and over and over and over again. You know, in that. I think that you know, this process of you know, now I lost my train of thought. This is terrible. So why did I mention you know, Intelligence Squared and Rosencrantz? I guess I wanted to make, and now I forgot it because I got sidetracked. Terrible. I'll remember it and I'll share it with
All right.
you.
Well,
You
I'll
know,
look forward to hearing from you offline.
so sorry, I lost my train of thought there. But have you ever participated in Intelligence Squared?
I did a debate, I think, with that organization with my colleague Brian Kaplan up in New York on, I think it was on AI actually at the time, a long time ago. That was my one participation, I think.
Yeah, I think it's a good concept of having these, Oxford style debates where people listen. He had told me at some point that a lot of people, they had a hard time getting speakers because some speakers got
Right.
shamed after they started out, and then they ended up not being well received by the audience, and they
here's an interesting idea. Imagine we do betting markets on if we had a debate between any two X and Y, and maybe there's only a 1 in 1,000 chance we're going to fund any one debate. But now for the price of one debate, we can have 1,000 markets. In if X and Y would have a debate on topic Z, who would win? I think those would be interesting markets to know who people think would win which debates. And so then you can have a lot more topics there, right? You get 1,000 factor ratio of 1,000. Basically, we set up a markets on 1,000 different combinations, and then we randomly pick one, and then we do that debate, and we pay off the winners on that one. But all the other bets were conditional, and now we could have a lot of market estimates of who would win which debate.
Yes. Again, it's all about people revealing their preferences.
Right.
Preferences. Instead of people falsifying preferences, we'd learn more about what people's real preferences are, and that's something that's very socially useful. What's socially destructive is the. I was listening to before this podcast. I was listening to one of your discussions with Agnes Collard, I guess.
Yes,
and,
Agnes,
and some other person, Jim or something. I don't know what was his name. I don't know.
Must have been one of our rare guests. We don't.
Yes,
we don't
and they were talking about they were talking about prediction markets and what was socially useful and not socially useful. I don't really like those words, socially useful and not socially useful, according to whose criteria of what's socially useful and what's not socially useful. But it seems to me that people should view a public good authenticity and having people reveal true preferences. It can't be good for society for people to constantly falsify preferences and to impede the flow of information. So the production of information and the production of authenticity, I don't know why anyone would think that that's not something that's positive to accomplish, and it seems to me the way we'll get closest to that is by implementing all sorts of prediction markets.
Right, but you've spent a lifetime learning to yourself to be honest about things and speak straight, and that's been hard. And a lot of people haven't spent a lifetime doing that, and they've spent a lifetime learning to bullshit well. And I think if they pause and think, what would happen if I suddenly had to face the truth consequences of what I said, they're a bit scared reasonably about that. That's not comfortable. That's not familiar. That's quite a risk they're taking.
I guess so. I guess they see it that way. So
maybe you get someone when they're young and not formed, and they'll be willing to go either way. By the time someone's spent a lifetime investing in a certain style, they might well, if they couldn't switch very well.
Yeah, I think the problem with that though is that people who are perceptive and good listeners usually have a good bullshit detector. So the odds are, if you try and get through life as a bullshitter,
But as you talked about with your investors in worlds where bullshit is the expected thing, if you don't put a bullshit in that world, they're going to lose. So people are looking for bullshitters to back often because the world demands bullshitters.
Yeah, I guess that's probably, we like to hear what we like to hear, and people are good at mirroring because that produces the best response. So you just have to not care what people think about you, and
that's hard. That's very hard for most people, honestly.
Yes. So I don't care what people think about me. So
and it's even hard to believe that about you. I believe you care less, but I don't believe you care nothing.
It depends upon who we're talking about, Mike.
Okay.
My wife, yes.
Yeah, you do.
Outside my wife, I would think if you polled my colleagues at work, do any of them really think that I care about what they think about me, what I think about them? I think they would tell you I don't give a shit. So
Compared to most people, that's an accurate description, but you don't care zero.
I think I like to think what disciplines me is my desire to like myself, and to like myself, I want to be a decent person. So, so I try and behave decently, but I try and behave decently because that's the person I want to be. I'm not trying to be decently because I want to please somebody else. I just want to figure out how I can be the person I really want to be, so I'm happy with myself. So, and if I'm happy with myself, I don't care what judgment other people make about me. So I don't know if that makes sense to you.
Well, again, that's just not the typical human style. You must be aware. And if we're trying to spread these things farther in the world, we do have to ask how they need to play out among more typical humans. That is going to be part of the game.
Which, going back to the question, which is why I'm not good at spreading things out, because
Yeah.
I don't really try and put effort into convincing others. I put a lot of effort into explaining myself so I'm understood, and I try and understand somebody else. But my goal of me trying to make myself understood and trying to understand somebody doesn't mean I'm looking to build an agreement or build bridges. Right. I just think that if we want to live in a world where people have, decent conversations with each other, you have to have empathy, and you gotta be listened, and people should feel that you're being authentic with them. And that's how we should interact with each other. And so I always tell people I try and be a decent person. I don't necessarily try and be a nice person. I try and be a decent person. So and I don't know how you would define the difference between nice and decent, but but this is what, again, I think the important thing is about the markets is we need real authenticity. We need
the last thing I'd like to ask of you is, do you have records of all these prices and markets that you had in the past? Are there like a file cabinet full of records? Could somehow like somebody extract the actual topics and dates and prices out of that thing?
I will check to see if I've retained any of these documents.
I get that you might not, but still, it would be an interesting data set to have.
Yeah, I will look to see if I have one place where I have old papers, whether this is in those old papers and whether I kept them or not. I have no idea because I haven't looked at this in a long time. So I will look, and I will get back to you on whether I still have them or not. But this has been really I'm so happy to finally have a conversation with you, because I've enjoyed so much of your writing and I've learned so much from it. And I'm very grateful for your intellectual contribution to my life.
Well, you're most welcome, and I'm happy to meet you. This is great.
Okay.
And now our narrator here. We'll do whatever our narrator does. We have an organizer here somewhere in the background.
No, I think I just say goodbye, and that's it.
Fine. All right.
You have a great afternoon.
Bye,
Robin.